Boom! Hey, yo, what's up, everyone? What's going on, guys? Welcome to the True Trading Group live stream. I had to start this live early because Amazon earnings are out and the stock is getting crushed. Amazon earnings are out, guys. The stock is down 23%. This is a massive sell-off for Amazon right now. We're still waiting on Apple. Apple is not yet out. Amazon earnings just came out. Welcome to the True Trading Group live stream, guys. We are live here. Amazon is now under $90. Amazon has just broke your lows of the year. We are now down to $90 on Amazon as that stock is now getting hit here on earnings. This is a miss for Amazon. This is coming in, guys. Amazon numbers as we are coming out here. I'll give you guys the lay of the land. EPS was a beat, 28 cents versus 22 cents, but sales were a miss. It's a small miss on sales. 127.1 billion. That's a miss on 127.84 billion expectations. Sees Q4 operating income between, that's got to be a typo. It says between $0 and $4 billion. Free cash flow decreased to an outflow of 19.7 billion for the trailing 12 months compared to an inflow of 2.6 billion for the trailing 12 months. Wow, that is why the stock is getting hit this poorly. It's all about costs. It is all about costs. International segment sales decreased 5% year over year, but increased 12% excluding changes in foreign exchange rates. That's big. So Amazon really taking a huge hit. They took a huge hit on the currency, but this is very weak Q4 revenue guidance. This is very weak Q4 revenue guidance for Amazon, and that is what is cratering the stock. It's all about the guidance. We've been talking about guidance. That is all that matters. And Q4 operating income, they only see between $0 to $4 billion. So that is a very weak guidance for Q4 coming out there for Amazon. Now it is going to be left up here to Apple. Let's do a quick check-in on the overall markets, guys, and that is a plummet. Look at the SPY just completely giving up that little. We were holding up all day today, waiting for earnings to come out from these mega cap tech companies, and you got a big quick drop there on the SPY. The Qs obviously are going to follow suit. All of your other tech companies, Alphabet, Microsoft, obviously Meta. These stocks have already gotten killed today and yesterday as those companies have all come out with earnings. And now it's Amazon. Apple is the last man standing. Let's see if those earnings are going to be as bad as all the rest. Amazon, Microsoft, Alphabet, Meta, the worst round of earnings that I've ever seen out of these companies. What I'm seeing here now for Amazon, and we'll talk about this while we wait for Apple. While we wait for Apple, guys, this major level of support you had down here right in front of 100, it was 102. 102 was a major level of support for Amazon. You guys can just see, look back here to the left, does not take an experienced chartist to identify that this level was previously a major level of support. We have now gapped well clean underneath that area. All right, we've gapped well clean underneath this area, and you're looking at now 102. 102 is going to be the level that you now expect to be resistance. All right, 102 becomes the level that you expect to be resistance. If that is to give you any type of a bounce back, but the weakness in tech does continue. We have some time before you get into Apple's earnings. Apple usually reports right around 4:30. They usually don't come out right at the close like some of the others. They usually will come out and report sometime around 4:30. So we will discuss that when that number comes out. But these are fresh new lows. The next support zone that I have here for Amazon is going to be in the mid-80s. The mid-80s, I'm looking around mid to low 80s, 85, 84. That's going to be the zone that we're going to be talking about. And you have to go all the way back to 2019 and then your COVID low from 2020. So COVID low from 2020 and then previous support there from all the way back in 2019. You guys can see those levels of support. And that's going to be the mid to low 80s. And that'll be the next little zone that we look for some possible long-term portfolio adds in the mid to low 80s on
Mike.
Next, what's up?
Sorry to interrupt you for a second. I told you Pinterest would beat. It's up 14%.
Mm-hmm. Let's go to Pinterest.
I love that company.
All right, we got a beat on Pinterest, 11 cents earnings per share versus 6 cents, 685 million versus 665 million expectation. So it is a beat on earnings per share and it's a beat on sales. Yeah, I like Pinterest too. Adam did tell me this though the other day that he thought Pinterest was going to beat. And there you guys have it. So that is a clean beat on Pinterest. Let's take a look over at Pinterest now, guys, and see where we think this stock can be headed. You have a lot of resistance up here, folks. A ton of resistance up here as you get into the mid-20s, the mid to high 20s. Right now we're 24.50, but you got a lot of resistance once you get to like 26 and 27. So it's nice to see Pinterest forming a nice little base down here. We kind of baselined all throughout the summer. You said we based throughout the summer, never got back down to retest those June lows. And then now you're getting a nice little pop up here on earnings. That's a nice sign of strength there for Pinterest. Those that like Pinterest for the long term, that's a nice looking buy there in the mid 20s for Pinterest for the long haul. Let's see what else. Okay, so no, they're just covering it now on CNBC, Pinterest. So earnings out there on Pinterest, like I said, guys, now $25. So nice little pop there, up 13% for Pinterest. That's nice. Pinterest sees Q4 revenue. Q4 revenue will grow in the mid-single digits on a year-over-year percentage basis, which takes into account slightly greater foreign exchange headwinds, again, the stronger dollar, than in Q3. Expect our Q4 non-GAAP operating expenses to grow low double digits percent quarter. They announced a global monthly active users were flat year over year. So global monthly active users were flat. So they were unable to increase monthly active users. So they were flat there. But nice to see that they're able to actually monetize that audience in a much better way. I want to hit on First Solar now. FSLR, the solar stocks have been red hot as of late, but First Solar trading to the downside. That's FSLR. The reason for the trade to the downside, Wow, that's a big drop in guidance. Okay, so a big drop in guidance. That's why First Solar trading down 5%. First Solar cut their profit guidance for the year. It was 115 to 165 million. They cut it to 75 to 110 million. They basically just cut their range almost in half. When you look at the low end to the high end, 75 to 110 million expectations when they were expecting 115 to 165 million. So that's a big cut in profit expectations for First Solar. So far, oh man, that Amazon hit is brutal. Apple is already trading to the downside. I think as people are just expecting, if Microsoft and Alphabet and Amazon are as bad as their earnings were, people probably just saying that, people probably just saying that this is going to be something that is going to be another miss, right? And you have usually until 4:30. You have usually until 4:30 when that number does come out. So some people are positioning. Seems like now as you're getting some volume, some pretty heavy volume coming into Apple right now after hours. This is pretty decent volume for Apple. It's like some people are just kind of exiting positions now in anticipation of their earnings. Adam is sitting on put options actually on Apple right now. So we'll see what happens when those numbers do come out. And to the shock and surprise of us all, Intel is actually moving to the upside on a beat. Intel. Yes. Intel. Can you believe it? Could someone have guessed that Microsoft, Alphabet, Amazon, and Alphabet were all going to completely bomb on earnings, but Intel was going to actually beat? So Intel earnings per share, it's a beat across the board. 59 cents earnings per share versus 34 cents. Their sales actually was a slight miss for the quarter, but okay, so this is actually something. I'm surprised the stock is trading as high as it is right now. They beat on earnings per share, but they missed on sales, barely missed. 15.3 billion versus 15.43 billion. And they see fiscal year 2022 EPS is going to be a miss. They say 195 versus 215. And their sales are 63 to 64 billion versus expectations of 65.26 billion. So I'm not really sure why we're trading to the upside on Intel. Maybe just because all of the negative news is kind of maybe already in that stock, and the stock has gotten absolutely pummeled this year. But they just lowered their guidance. So Intel lowered their guidance, but the stock is actually trading to the upside right now, as we are actually green now on the day. We just went from 26 up to 27.50 on the back of what is not good earnings from Intel. But maybe that can just be the worst. The worst is behind us type of scenario for Intel. You can see the stock has gotten absolutely clobbered all year. This stock has gotten clobbered. All right. Has gotten absolutely clobbered. All right. So now this is seeing the SPY trade significantly to the downside. Right now you're seeing the SPY held up today. We talked about this during the day inside of chat, where the markets have done a very good job of holding together while you're getting all of these disappointing earnings announcements from mega cap tech. There are other companies that earnings were actually very good. There's a lot of other companies that have come out. Their earnings, like Caterpillar was good. Honeywell. You have a lot of other companies that are in the Dow that actually performed very well today. McDonald's was very well. I mean, you have a couple of other companies that earnings were actually fantastic. Mega cap tech is the redheaded stepchild here all across the board. I mean, just horrible earnings. I don't think I've ever seen these companies miss on earnings this poorly in the last decade, to be honest with you. So, those long-term, they're just looking to see what they're saying on CNBC if they were talking about something. So the markets were holding together mostly because you got the Dow components had some pretty good earnings. And then you had yields pulled back. The dollar had pulled back, and that really was able to help the market stabilize. But, we talked earlier today that I doubt the market's going to be able to hold together. I doubt the market's going to be able to hold together if Apple and Amazon both disappoint. Web services revenue for Amazon came in light, 20.5 billion. The expectation was 21.1. I mean, we're getting hit now in the markets, guys. I mean, now we're all the way down to 376 now. We closed up at 380. So that's a 4-point drop on the back of Amazon's earnings. Guy from Wedbush Securities thinks Apple is going to weather the storm better than the rest, so he thinks it's going to actually be a little bit better. Yeah, man, their Q4 revenue guide, there's the number. I knew that was a typo. So Q4 revenue guide is 140 to 148 billion versus 155 billion on the revenue guide for Amazon. So that's a big drop in guidance. I mean, I don't know. Is that a big enough drop in guidance for the stock to go down 22%? I feel like this is really getting beaten up for reducing that guide by that number. I don't feel like. All right, Stephanie Link now saying she doesn't expect a disaster. So that was not a typo. That was operating income was 0 to 4 billion, but sales they see 140 to 148 billion versus the expectation was 155 billion. I think really why Amazon is down so much is because they have not been able to control their cost. And there's a big issue there with free cash flow. Their free cash flow decreased to an outflow of 19.7 billion for the trailing 12 months compared to an inflow of 2.6 billion for last year's trailing 12 months. That's an insane difference. That's an insane difference in that free cash flow for Amazon. Very, very, very interesting numbers there coming out of Amazon. We got a couple of minutes, guys, before you get Apple. Pinterest is still trading well. Pinterest is still trading up there at $26. After their beat. That's a clean beat for Pinterest. So far out of the earnings that we have seen come out, Pinterest actually are the best that I am seeing. You just got US Steel. US Steel came out 5.2 billion in sales. That's a beat. They were expected 4.95 billion. They also beat on earnings per share, 195 versus $1.93. So that's a beat there for US Steel. Stock's not really having too much of a reaction. And Intel is really moving to the upside. It's not because of a good earnings report. Intel CEO doesn't say how many employees will be cut, but says near-term flexible workforce impacted. So maybe that's why the stock is moving higher. So company, it looks like Intel going to be laying some people off, cutting back on costs, and that could be maybe the catalyst for the stock moving to the upside. All right, guys, we got 10 minutes before Apple's earnings. I think we got to start looking at, you really got to start looking at where these next levels are in these stocks. And like I said, 84 looks like a nice zone there on Amazon. And then you're talking about your next major level I mean, I don't even want to talk about this level because I don't think that we get down there, but $68 is going to be a huge level for Amazon. That would take you all the way back to 2018 levels on Amazon. I do not believe that the stock is going to get down to that level, but that would be your next two major support levels that I see. But realistic support levels are going to be that 84, and then I see more support around 80. So 80 and 84 look to be like nice zones of support there for Amazon.
So you truly think this is a dramatic moment that we are going to mark in time? We'll timestamp this as a shift for these companies as the tried and true investments that they have been for the last many, many years.
Well, I don't know that I would say they're companies that we're going to run away from as investors.
Just listen to the commentary here on CNBC about.
Earlier in the show, valuations matter a lot right now. They matter almost more than a lot of other.
So those are the zones that I'm looking at there for Amazon, guys. I mean, you had this flat, Amazon was flat here for the entire year of 2019, and now you're right back into that level. I mean, it's to think this was not too long ago, up at, well, after the split, obviously, 150, 175. Now to see us down here at 89 on Amazon, and you take a look at, Alphabet down now at 91, as Alphabet is now just continuing to just bleed to the downside as these stocks are all making fresh new lows. So Alphabet's there now, fresh new lows. I mean, Microsoft still hasn't broken that June low, but it's getting pretty damn close. I love the support level at 200 on Microsoft. If Microsoft gets a 200, that's a back the truck up for me and my long-term portfolio for Microsoft. Man, Apple, people are not really waiting for this Apple number. I mean, that stock is beginning to sell, and the SPY is just gone. SPY is now falling to the downside, guys. We're now down 2% now. Down 2% now as you're just getting the SPY and the NASDAQ are just starting to sell off now ahead of Apple's earnings that we have coming out here in about 6 minutes, guys, about 6 to 7 minutes until we are going to be hitting on Apple's earnings. But right now, Amazon falling right in line with the rest of mega cap tech. Massive disappointment from Amazon. It now just comes down to Apple. Can Apple save this little bear market rally? As you can see, the markets are trading to the downside ahead of Apple's earnings. We have to see. We're going to find out in about 6 minutes. We got about almost 2,000 people on the live stream right now, guys. Welcome, all of you. It's a big day here. Apple and Amazon earnings after mega cap tech has just been getting destroyed, ending the bull market, or the bear market rally, rather, ending the bear market rally that we've seen in the last 2 weeks as the markets have traded significantly to the upside off of the CPI low from October. That party has come to an end here thanks to mega cap tech disappointing earnings. I'd like to see how many people we have on the live stream. We got a couple of minutes here before we get to Apple's earnings. Guys, just do me a favor. If you're not a member of True Trading Group, type the letters TTG right now in chat. Again, that's TTG. Type those letters TTG in chat. If you guys are not members of True Trading Group, I know we have a ton of our members that are on with us live, but if you're not a member, just type TTG. I want to see who we have on here that is not a member of our community, so we can just get a good feel for. We have about, almost 2,000 people watching live. So let's see. We got Joe F. Maury. We got Tio Papali, Kevin, Felicia, Rebister. Let's see. Jay Flacco, George, Crystal, Twisted Merm, Altamas, Mr. Top, Diogo, Atius, Jermaine, Norman, Avery, Kenneth, Tim, Trekking, Dave L, Bala, Kathleen, Sam, No Drip, Diana, Ben, Sushant, Ben, you're killing me. Jay Flacco, Andrew, Kenya, S, Wendy, Guy. Wow, a lot of new faces. Look at all the new faces joining us for Apple's earnings. I love it. You guys all want to get up to date with what's going on here. Amazon is getting just smacked, down 20%. Okay, and we are now trading 375 on the SPY. All right, so we came right up into this massive level of resistance, and let's talk about this level. All right, we got 4.5 minutes to go before we get Apple's earnings. We'll break that down for you guys live. Everybody's waiting in anticipation. Everybody expects them to be bad because of everything else that you've seen. But, you know, we've talked about this level on our live streams now for the last week. And we caught this move to the long side. We got flat our call options. All right, we got flat our call options the other day going into the close before we actually got your earnings from Google and from Microsoft, and we were able to capitalize on this move to the upside. So we actually caught this long and exited our call options on Tuesday. And I'm glad that we did exit those call options on Tuesday. That was 125% gain for us to the upside. But now you have run right smack into this major resistance level, through the high 380s, 389, 390, right? That's this level that you guys can see right here. And you look back to the left, this used to be a support level for the SPY in September. Then you broke underneath it, and then that level became resistance. And this is the Fed day. So this was Fed day. If you guys remember, that was the Fed meeting, right? And that became resistance. It was previously support. We rallied back to that level. And then you also had, for good measure, the 100-day moving average, which is this purple line you see on my screen, or pink, magenta, fuchsia, whatever color you want to call it. That's the 100-day moving average. So we rallied right up into that level, and this resistance level just punched us right in the face. And then you get on top of that all your horrible tech earnings, and now you're getting this massive move to the downside. Right now you're getting this massive move to the downside in all your mega cap tech names. And it all comes down now to Apple. Can Apple right the ship? We got 3 minutes to go. What do you guys think? You think Apple misses or beats? What do you think? What do you guys think? You think Apple misses or does Apple beat? Maybe we can send out a poll, Adam. What do you think? You guys think Apple misses or you think Apple beats? Oof. Amazon is now session lows, $88. Session lows for Amazon, $88. Microsoft at $222, session lows. Alphabet at $90, session lows. Meta at $96.50, not quite session lows. SPY session lows, $375. It all comes down to Apple. What are we going to do here? I think Apple guides lower. That's my opinion. My opinion is that Apple guides lower. That's what I think. Tesla trading lower. All right, guys, we got a minute and a half until Apple's earnings. A minute and a half. We're going to call it out live. One minute to go, guys.
By the ghost of Steve Jobs, let's effing go!
Adam's in Apple puts, guys. Apple puts on deck. What's it going to be, Adam? We are seconds away.
Hum, babe. Hum, babe.
Come on,
Hum, babe. Let's go!
All right, guys. We are moments away from Apple's earnings. Is Apple just going to be another Amazon? Is it going to be another Microsoft? Is it going to be another Meta? Is it another Microsoft?
Or is it going to be another ex-wife and take my money? Let's go, baby.
What's it going to be, folks? Here we go. 20 seconds away. It's so funny. Apple's going to come out and be like, F you guys. Yeah, there you go. There you go, Apple. There you go. There you go, Apple. Show them who's boss. Now, let's see. Let's see what we get here, guys. Let's see what we get. All right, some beat, some miss.
Oh, I like that candle.
Hold on. Okay, they beat on revenue, 90.1 billion versus 88.9 billion. EPS beat 129 versus 127. iPhone revenue miss. iPhone revenue 42.6 billion, expectation 43.2 billion.
I tried to help there. I bought two. Is it a mixed bag, Mike? Is that what you would call it?
Yeah, it's a mixed bag, but services missed. I know this is you know, they crushed Mac revenues. Mac revenues were a huge beat. Everything else missed. Services missed, iPhones missed, iPad missed. All of the revenues missed except for Mac.
We did it! Yay!
And the other product, so watch, AirPods, that was a beat too, 9.6. So services missed, iPhone missed, iPad missed. Stock is getting crapped. 8% down now. We got to look at the SPY. This is going to start.
Guess what? I'm buying lunch tomorrow for the office, baby.
Right. So it's SPY now, 374. Those are fresh new lows for Apple. Want to get some guidance numbers. You know, it's not as bad as all the rest, right? So the stock is down. It looks like it's kind of trying to stabilize here, down around 8%. We'll talk about support levels for Apple. It's nowhere near as bad as the others. You know, Amazon is down 24%. Meta's down 26%, right? Alphabet is crushed down, you know, since they've reported earnings. Same thing with Microsoft. These stocks are just melting away right now to the downside, and we're going to be able to trade the crap out of these things tomorrow. I cannot wait for tomorrow. My goodness. Let's talk about support levels here for Apple. Apple support level you have to be looking at now is going to be the CPI low. The CPI low is going to be your support level. All right, this CPI low will be your support level. I want you guys to draw a line right across 134. You draw a line across 134. 134 is a nice support level for Apple. Why 134? You guys can see 134. That's the low from the CPI reversal. And when you look back here to the left, that was also a nice little pivot support level there in the end of June. And prior to that, it was support back there in May. All right, so this is a nice level of support for Apple. You watch for Apple. If Apple stays underneath 138, 139, where am I getting that level from? We're going to draw that right across these previous lows, right? You see how this was previously a support level, and then we broke it when you had your CPI number, and then you regained it, and it reestablished itself as support. So you see how it reestablished itself as support? It was support, right? Follow me here. I can lower my CNBC now so you guys don't hear. We are hiring deliberately, and so we've slowed the pace of hiring, and we're going after cuts and our savings into commodities. That is a statement from Tim Cook on cost cutting. All right, so you can see all of these mega cap tech companies trying desperately to cut back on their costs. Cook says we have slowed the pace of hiring, but they're still hiring. So you guys can see this used to be support, and then it reclaimed support. That still becomes a support level there for Apple. So you watch for Apple down there around 138, and then 134 is going to be the big level that we've got to be able to talk about, right? So that's going to be your major levels there for Apple. Major level there for Apple. Apple's starting to rebound. Now down 5%, starting to rebound a bit here, guys.
You watch your dirty mouth.
Oh, we just took it back. We just took back the whole move. We just took back the whole move to the downside.
It's such a garbage.
Apple moving to the upside.
Sell your puts after.
Now look at the SPY. Look at the SPY. Well, guys, look at the impact that Apple has on the overall markets. Look at this. Watch how big of a weighting Apple is on the S&P. These are not bad numbers for Apple. You know, they beat on total. They beat on their EPS. And they beat on sales total.
I'm
But
still
they just-
buying lunch, but I'm gonna buy Chipotle instead of steak now.
Well, what happened? I mean, listen, if I'm just curious on why Mac sales were so strong.
Well,
They
Sammer
crushed.
had a good point. Sammer, what was the thing? You're right. I've read about that too. Yeah, they brought the previous, before the new MacBooks, the previous generation MacBooks, they made a bunch of changes that a lot of enthusiasts didn't like. Yeah, Sammer bought one and he had a MacBook. The new ones that they brought back had all the ports and everything that people liked, so a lot of resurgence, a lot of people bought them.
Yeah. Okay. So again, because they crushed on Mac. Well, Mac revenue was 11.5 billion. The expectation was was 9.5. Look at Apple moving to the upside. Did Apple just save the market? Did Apple just save the market, guys? You can see some things are beginning to bounce a bit. Did Apple just save the market? We'll see what happens when they do their conference call. Their conference call will be in about a half hour or maybe 5:30, either 5 or 5:30 for their conference call. But you'll probably get some more movement there. But disappointing iPhone sales, disappointing iPad sales, disappointing services sales.
What services do they offer? Like iCloud?
I guess.
I'm trying to figure out the services part.
Well, there you go. I mean, they kind of took it back. I mean, Apple has now stabilized right where it was. This is where it was.
Apple Music, Apple TV, all that stuff. Yeah.
Yeah.
Arcade. Yeah. Oh, look, Free Girls in Your City are back.
Oh, thank goodness. I could use one.
But this one doesn't have a link. They're just saying that there are free girls in your city.
Oh, maybe if I DM them, they'll send me a free girl.
That's what you know what? That's what it is.
That's what I have to do. I have to DM them. I got to DM them. I can use like a trading assistant. You know? Like if I got to get up and go to the bat, they can watch my positions, you know, manage my stop losses.
It's great.
It's free. They said it's free.
Nice. So next time when you guys think about True Trading Group, just associate it with misogyny. And now Mike Edward is canceled. Join us tomorrow when Michael Paranotti, the new head trader of True Trading Group, comes.
Oh, okay. All right, guys. So let's recap everything that has just transpired. Right. Let's recap everything that just transpired. Amazon, massive miss. Stock down 22%. Okay. Apple, mixed bag of earnings. Mixed bag of earnings. They beat on sales. They beat on earnings per share. They beat on margins. But they missed on individual product sales, which is I would not have thought that if they missed on iPad, on services, and on iPhone sales, I would not have thought that they would beat on overall sales. But the Mac sales came in very, very strong. And that's what's actually giving the stock a little bit of a boost. And they're going to be cutting back on their costs. And their numbers are obviously, their numbers are nowhere near as bad as these other companies that have come out. And then the stock is reacting as such. You know, stock's only down 4%, but the stock's down 4%, not really on Apple's earnings. The stock's down 4%, just an overall weakness in tech. You know, overall weakness in tech, and you're starting to get a little bit of a bounce here. Now, you see the bounce back there in Microsoft, so things are starting to move back to the upside a little bit. We'll really get the full direction once they have their conference call, and once Tim Cook goes through all the different line items, and Tim Cook gives his statement and he gives his guidance on everything going forward. I'm sure he'll also address currency issues with the strong dollar and how much of an impact that had on their revenue and their earnings. And I'm sure he'll also address demand in China as well. So you'll get that. It's either 5 or 5:30. That conference call is going to begin. But that I think is going to be very important. You could see Apple go green. And when I say go green, I don't mean go green on the day, because in order to go green on the day, you got to go back to 150, 149.75. but to go green from the close. So we closed up there around 145. Depending on the conference call, you could see Apple push up to 147 and then stabilize after hours. And then that would stabilize the selling pressure in the SPY as it already has. You can see the SPY has already recovered $3 of upside after the Amazon earnings. You saw the markets fall, and now you're recovering about $3 of that, about $2.50, $3 of that in the SPY after Apple coming out with their earnings. So it seems like Apple might have just saved the market, guys. If Apple came out and Apple was as much of a miss as you saw in Amazon or you saw in Microsoft or Alphabet, this market would be in trouble, as we are now just kind of trying to stabilize here. And what I'm looking at on the SPY myself personally is for there to be a little bit of a support level around 374.50 to 375. I like that level for potential support. If you get deeper than that, I love the mid 360s as a support level. And the next catalyst that you're going to be looking at to move this market is going to be on November 2nd. And November 2nd is going to be your Fed meeting. It is expected the Fed is going to give you 75 basis points, but there is the possibility now of the Fed adjusting their hawkish tone that they've had since September, since the end of August. So they've had a very hawkish tone since the Jackson Hole meeting, the end of August. That's put pressure on markets. There is the thoughts and the expectations that the Fed may walk back some of that hawkish tone, or they may adjust some of that hawkish tone to not be as hawkish as they have been. They might insinuate that, hey, we're giving you 75 basis points right now, and then maybe we do 25 basis points in December, and then maybe we take a pause and we look around and we see what happens with inflation. If you get some type of a walk back in the hawkish tone of the Fed, if the Fed is not as hawkish as they have been, then the markets have more room to upside. It's interesting to see the market still sitting here in the mid 370s, even though you have all of these mega cap tech companies, which are the biggest companies in the entire stock market. Literally, it's Apple, Microsoft, Alphabet, and Amazon are the four biggest companies in the S&P 500. The S&P is a weighted index. To see those companies trading as poorly as they have over the last 3 days, and to see how far these stocks have fallen, it's surprising to see the market still up at 376.
Let me interject here for a second. What do you think happens now? So let's assume the market holds here, right? Like everything's good, because this has been a crazy week. I mean, what a chop fest today, right?
Yeah, today was very choppy.
I don't think people realize like how big of a week this week was, and then going into next week with the Fed meeting. I mean, dude, if there's any wiggle room on what they're going to do, or any inclination of any wiggle room, and remember, the Fed had a what do you call it? A blackout week, right? Is that what it was this week?
Yeah, the Fed, they can't make public statements a couple of weeks prior to a rate decision, an FOMC meeting, a decision.
Right. So you guys had a week where there was no Fed meetings. There were no Fed members really talking this week.
Yep.
So now you had a week off from that, and it was the first week in a while where earnings really got to dictate the action. And I mean, overall, earnings were kind of a mixed bag. It wasn't as terrible as people thought it was going to be, right?
It's a mixed bag for sure.
It's a huge mixed bag.
It's a mixed bag in the sense of like the overall market, because you had a lot of companies that beat earnings and did very well. Right. Visa, Caterpillar, McDonald's.
Did Capital One beat today? They came out today too. Did Capital One beat? I'm interested to see what the credit cards did. What Visa? I know Amex.
Capital One's trading to the downside right now.
Oh man. What's in?
Yeah. Oh yeah. They beat on sales, but they missed on earnings per share, and their provisions for credit losses is 1.7 billion in credit losses. So that hurts, but their sales were 8.8 billion versus 8.57 billion. So they did beat on sales, but they missed on earnings per share. So again, looks like maybe an issue of Again, it looks like maybe an issue of costs and expenses and everything and missing on earnings per share.
Got it. Talk to me about the Santa Claus. First of all, explain your theory on the Santa Claus rally. Explain what it is. Explain your theory on it. I've been seeing a lot of mainstream media start to adopt that theory now. Meanwhile, you've been talking about this for almost 90 days.
Yeah. I've been talking about this since August.
Talk about what your theory is with the Santa Claus rally as we get into November. And really, the Santa Claus rally, if it happens, is going to take place end of November and December, right?
Yes. So
all right, talk about it.
Yes. So what I did, and this is, if you guys have followed my channel for a while, you've heard me talk about this a lot. But if you're new to the channel, as I know there's a lot of people that are, in the middle of August, August 15th, 16th, 17th, we did a series of live streams, and you can find them right here on this YouTube channel. You're more, be my guest. Please go check them out when you're done with this live stream. And the title of those were Buyer Beware. As a lot of people had FOMO, thinking that they missed the bottom, and people were asking me, should I add to my long-term portfolio? And I said, no, that you're going to get another, a sell-off in September. And we switched our mindset up in September to be bearish, and we basically were shorting everything in the month of September. Turned out to be one of the biggest months that myself and one of the biggest months that TTG members have had. But I was very specific in my outlook for the rest of the year. And I said in August on those live streams that I think we're going to have a Santa Claus rally. But first, I think we're going to sell off in September. The markets stabilize in October, and you have a Santa Claus rally November and December. Santa Claus rallies mean that the markets are going to move higher, basically, and there's no exact date for when it starts or when it ends, but it typically is around Thanksgiving to New Year's, right? It's that time period where historically, if you look at that time period, if you look at that, that 45-day period of every single year in S&P history since the S&P was founded in 1928, if you look at that, okay, then that's funny. Will we see a Santa Claus rally and or Hanukkah Harry rally? That's good, Adam. So I lost my train of thought. Let me just maybe look at that. Yeah, okay. So there's no exact time period, but if you look back throughout history, that time period is typically a strong time of year for the markets. The markets historically have performed well, meaning they move to the upside during that time period. Just like September is actually the weakest time of year. If you look back at every single month, every year, September is the worst month. That time period, November to December, is typically a strong period. But what I think is going to happen, I think the fundamentals are actually going to line up to support that thought process of the Santa Claus rally. And what I think is going to give you the Santa Claus rally is a shift in hawkish tone from the Fed and finally seeing a decline in inflation. I think that once you get to November and December, I think you're going to see two things happen. I think you're going to see the Fed be less hawkish with their monetary policy and how strict they've been the last 2 months. I think that hawkish tone is going to subside a bit, and the markets would like if that hawkish tone subsides. You can't just keep raising 75 basis points on every Fed meeting.
I mean, they can do whatever they want, but you're saying they should not, in your opinion.
No, they can't keep raising 75 basis points at every Fed meeting. So like they're getting to the point where they're getting to their target. So you can't just keep raising 75 basis points. So when the market takes a look at that and says, okay, we're almost there, the Fed doesn't have that much more to go because they're almost at the target rate that they have set forth for themselves. They're not, eventually the market's going to say, well, if you give us 75 basis points now in November, how many more rate hikes do you really have moving forward? And the chances of you getting another 75 basis point hike after that is basically zero. And unless the only way the Fed could give you another 75 basis point hike after the November meeting is if the Fed moves their target rate even further, and they just moved their target rate higher at the last Fed meeting. So the chance that they're going to raise their target at this meeting is minimal. And you also saw the Bank of Canada, the Bank of England, and the Bank of Australia. They have already shifted away from the hawkish tone that they all took 2 months ago.
Yeah, but this is America.
Right. Yes. So the Bank of England, they stepped in with quantitative easing to stabilize their bond market. The Bank of Australia, they raised less than they were expected to raise, and the Bank of Canada raised 50 basis points yesterday. They were expected to raise 75.
All right. Go ahead. I wanted to give you a scenario real quick here. We go ahead and next week, Fed comes out 75 basis points, right? Nothing crazy happens in earnings tomorrow. Apple holds, the SPY holds above, your support levels that you outlined earlier. We're in pretty good shape going into the end of the year at that point.
Yes, you are. Because
Drew Lawson had a good question in chat. The 75 basis point is already kind of baked in or priced in.
It's 100% priced in.
So it's not like we're going to get a 75 basis point hike and then everyone's going to be like, oh crap, now we got to, no, that's not going to happen because it's already priced in.
That's what I'm saying.
What happens if you get a 50 basis point?
Markets move to the upside.
How far to the upside? Do you think we go back above 400?
Before the year's over, yes.
Oh man, that's big, dude.
Yeah.
That's big.
I mean, listen, this is why, this is textbook. This is textbook bear market action. It really is. It's textbook bear market action. You got the big sell-off early, then you got the big, huge bear market rally that caught people. It took out the lows, and then now you're stabilizing, and then you bounce back at the end of the year. It's typical bear market price action. And the fundamentals are starting to line up with that for you to move higher towards the end of the year. The things that need to happen from a fundamental standpoint is the Fed has to be less hawkish, which I think you're going to hear on November 2nd. You're going to hear it here first. I think the Fed is going to be less hawkish on November 2nd.
What reason do you think they have to be less hawkish? Because Jerome Powell, I don't know the man. You don't know the man.
The reason why
that man looks mighty peeved when he gets up there on the stage, bro. He looks like everyone's looking for a reason to not take him seriously.
I'll tell you why I think they're going to be less hawkish. Because if they give you 75 basis points, which I think that they should at this point, because the market is giving it to them. The market has already priced it in. The market's expecting it. So give it to the market if they're expecting it. Sneak in the extra 25 basis point hike. The market expects it. So if the market's already priced it in, it's not going to be a surprise. It's not going to be a shock to the system. Do it. The market's giving you the runway for it. So do it. Give us 75 in November. But by giving us 75 in November and by not giving us 50, the Fed now has the ability to say, we are almost at neutral, meaning we are now going to slow down our rate hikes. And if they start to say that we are almost there, the market will take that as they are slowing down. Maybe in December, then you get 25 basis points. Maybe in January, you get 25 basis points. And then the Fed pauses. They're not going to pivot. They're not going to cut rates. You don't need them to cut rates. You don't want them to cut rates. You want rates to stay high. You want inflation to come down. Rates have to stay high in order for inflation to come down.
Dave P has a great point. You know what happens right after the FOMC meeting? The week after? Midterm elections. Bro, let me tell you something. If you are a trader, and I don't just mean day trader, I mean swing trader as well, man, November is going to be fire.
November is going to be nuts.
November is going to be something serious.
And midterm elections, thank you for bringing that up, Adam and Dave. Midterm elections historically are a bullish indicator for the market.
Oh my
and right now it looks like Republicans are going to be taking back control of either the Senate or the House, or they're going to be or one or both. But the market likes gridlock. So if you have a situation where, let's say you have a Republican-controlled House or a Democrat-controlled Senate, or a Republican-controlled House and Senate and a Democrat-controlled White House, that's gridlock, right? Where the markets are going to say nothing is going to get accomplished policy-wise, but the market likes when nothing gets accomplished policy-wise, and that is going to be a positive thing for the stock market. Historically, in the past, whenever you've had gridlock in Congress, it's been a positive for the stock market. So all of a sudden now, all of the negative catalysts that everybody was worried about 2 to 3 weeks ago, what were they? It was rising yields, a rising dollar, earnings, Credit Suisse maybe going bankrupt, right? These are all the things that people were talking about that had them terrified. Well, Credit Suisse didn't go bankrupt. Earnings are now behind you. Yields have come down. The dollar has come down. So what catalysts are there left? The Fed meeting on November 2nd, which if they give you 75, they may now be less hawkish. So that could end up being a positive catalyst for the market. You have the midterm elections, which it looks like right now will leave us at gridlock, which is a positive catalyst for the market. And then you get a CPI number for the month of October that you're going to get in November. And if that number for the first time comes in light, then all of a sudden you survived without making new lows. You survived all of your potentially negative catalysts. And now you look forward to nothing but potentially positive catalysts that take you into a seasonally, historically strong time of year, which is November to December. And that gives you the potential Santa Claus rally into the end of the year. Now, potential things that can void that. And if these things start to happen, I'll come on these live streams and I'll tell you that this entire thought process has changed, and I'll adjust my thesis around that data. If the Fed comes out and gives you 75 basis points and still insinuates that we are not finished yet, and if the Fed raises their target rate on the November 2nd meeting, I don't think they're going to, but if they raise their target rate at the November 2nd meeting, then forget about it. The markets will move back to the downside. I do not believe that they are going to do that. I think that's a very unlikely scenario that they move their target rate again after they just moved it at the last meeting. So I don't think that's going to happen again. All right. The other thing would be if your CPI number for the month of October actually is higher than it was in September. So those are going to be the catalysts that could potentially, cause that thesis to unravel and not come to fruition. But I am standing here on this live stream telling you that I believe that's how this is going to play out as we get into the final 2 months of the year.
Yeah. Did you see the news about President Xi from 11 hours ago or 12 hours ago?
No.
Something about him. Hang on, I'll pull it up right now. Yeah, this is from usnews.com, or I'll just pull it up on Reuters. Share my screen, just put it up here for you. Check that out. It's from 14 hours ago.
Interesting. Do you know what the context is and what he's referring to? He's probably referring to semiconductors.
China's willing to work with the United States, find ways to get along to the benefit of both. Chinese state television reported on Thursday ahead of possible meeting with U.S. President Joe Biden in Indonesia. As major powers, China and the U.S. should strengthen communication and cooperation to help provide stability to the world. Xi said in a message to an event of the National Committee on U.S.-China Relations on Wednesday. The two countries have been, and then it just gives a little history of it. The rest is just like summary, but that's what he said.
My guess is that probably stems from the semiconductor ban that we've put on China, where we're not letting our semiconductor companies issue specific types of chips to China. And that hurts China. Yeah, they really need that for military. They need that for technological advancements, AI, all these different things that, just the advancements of technology in general. And we're not allowing companies to provide it to them. So that's a problem.
Yeah, and I see people in the chat saying, "Oh, he can't be trusted. He can't be trusted." That's probably true, but you keep your you keep your friends close and your enemies closer. There's a reason that saying exists. So then that's the extent of my international international policy.
Yeah, international affairs. Thank you.
Yeah, that's the extent of it right there.
Adam with his political science degree coming in
Yeah,
there.
yeah. Don't fly through Frankfurt. That's my other thing. Crazy, man. I mean, I think that I mean, what a crazy time. I mean, this is going to be nuts next week and for the rest of November.
Yeah, man. I mean, you guys, there's so much unfolding here. I mean, the market has taken some haymakers. The market has really taken some haymaker punches.
Bro, I mean, are you at all surprised at how well we've hung in there?
I am. I am. I'll tell you this though. We're lucky that these earnings happened this week and not last week, because the reason why the market has held up as well as it has, and I'll tell you this right now, it's the fact that yields and the dollar have pulled back. And yields have been such a huge part of this move and my trading these last couple of weeks. Those of you that have been watching my live streams, you'll know that last week, before we got long SPY call options. We got long SPY call options last week once we realized that we got the November 4th $370 strike call option. We bought that option on Friday at around $7. And it was because over the course of 2 to 3 trading days, yields were rocketing to levels you haven't seen since 2008. It was just a massive move in bond yields. And when bond yields move higher like that, it puts pressure on stocks, and stocks move to the downside. But the market was able to hold up and not go down while yields were exploding to the upside. And I'm sitting there saying to myself, and then I saw some bottoming chart patterns on bonds. And I brought that to people's attentions last week. And I was like, guys, it looks to me like bonds have bottomed. And I said, I think that yields are going to pull back. And I mentioned this, big shout out to the Trader TV Live crew. I mentioned this on their live stream last Thursday. Last Thursday, I was on their stream and Brandon had asked me about yields. And I said that to me, it looks like yields have topped and they're ready for a pullback. And if that's the case, the stock market should move higher. I also sent out a tweet about that on Friday. So if you guys want to follow me on Twitter, go ahead and do so. It's at @MikeEdward_TTG. Again, it's at @MikeEdward_TTG. Okay, at @MikeEdward_TTG. You guys can give me a follow on Twitter. I always post trade ideas and market commentary. But I sent out a tweet and I said, guys, not for nothing, I can't ignore how well the SPY has held together in the face of these spiking yields. I think yields are topping out, and if yields pull back, the market should move to the upside. I'm buying call options. So that's what we did. We bought the November 4th expiration 370 strike call around $7 on Friday. We rode that thing all the way up into the mid to high 380s on the SPY on Tuesday. It was a beautiful swing trade for us. You work full-time jobs. You're not in front of your computer. Anybody could have followed along with that trade. And we got 125% gain selling that contract over $16.
Awesome.
So it was an absolute monster trade, and it all came back to yields, right? And now yields have pulled back even further. The 10-year was at 4.3. It's back to 3.9 and change. The 2-year was at 4.6. It's back to 4.2 and change. Those are significant drops in yields. If that was not the case, if yields were still pushing to the upside and you got all these mega cap tech earnings that came out this week, we wouldn't still be at 376. We'd be down here. So the reason why we are still holding up is because of what you're seeing in yields. Guys, the conference call for Apple has just started. All right, the conference call for Apple has just started.
Is there anything tomorrow, like anything as far as earnings tomorrow that you're going to want to pay attention to? What do you want to pay attention to tomorrow for earnings?
For me,
or is that it, or does it not really matter tomorrow?
You still have a lot of earnings. You still have earnings tomorrow, but the biggest companies are out of the way. I mean, it can't get any worse than these tech companies dropping as much as they have and missing as badly as they have. It doesn't get any worse than that.
Right.
So, you're talking about all these companies that used to have $1 trillion valuation, Amazon, Meta. I mean, these companies no longer are sitting at that $1 trillion. I mean, obviously Apple still is, but.
Okay, what about Exxon and Chevron? They report tomorrow. Is that not?
Oh yeah, I think they're going to blow out earnings. These stocks are trading at all-time highs. These are the bellwethers. I mean, I'm so happy with these positions that we own these stocks in True Trading Group. I put out a report on January 2nd for members naming energy my number one sector pick for 2022. I put out a list of companies that I believed were going to be good buys: Chevron, Exxon, Conoco, Phillips, Devon Energy, Pioneer, Occidental, and all of these stocks are trading at or near all-time highs.
Here's a really good comment by Maury Z, right?
Sure. Yeah.
Back to reality on company valuations.
Yes.
Let me tell you something. That is what we have been saying this whole time. This volatility in this market is the biggest opportunity that you're going to get. And this is not always going to be the case. This is going to level out, and it's going to go back to the same type of stuff that it was. You're not going to have this type of volatility forever. You're not going to have this type of opportunity forever. I mean, it's literally what you've been saying the entire time.
Yeah. You've had zero interest rates for a decade, and that allowed valuations to just get so insanely out of control on some of these companies. And, we knew that this was coming this year, guys. I mean, this is why we sold our long-term portfolio. We sold our tech positions at the end of last year at all-time highs. September and October of last year is where we sold out of our tech positions in the long-term portfolio. It was all the way back here. This is where we sold our long-term portfolio positions in all of our tech names, and now you're seeing those were unrealistic valuations, unsustainable valuations. And now you're seeing these company stocks are getting absolutely obliterated. But they're getting obliterated. Why? Because they're bad companies. Do you think Amazon is a bad company? Every single one of you are going to use Amazon tomorrow. So no, Amazon's not a bad company.
Yeah, it's crazy. They talk about a miss, and like you're talking about even Meta. You know how many billions and billions of dollars Meta makes?
I know, it's crazy.
It's like,
yeah, it's crazy. You're talking about companies that generate hundreds of billions of dollars in revenue. They are still the biggest companies here in the US and the most successful. Their valuations are coming back down to earth. Their valuations are coming back down to realistic levels. And I think that it's a once in a lifetime opportunity for investors to be able to actually purchase shares of these companies at realistic valuations rather than the unrealistic valuations that they were trading at last year when interest rates were still zero and everything was going out of control. Now you get this raise in interest rates that'll bring down all of these tech valuations to reasonable levels. And then eventually the Fed will move rates back down. They're not going to move rates back to zero, but they may raise rates to like 4.5%, maybe 5% next year. But then eventually they'll move rates probably back down to around 3% or 3.5% Fed funds rate. And then things will stabilize. And then tech will experience another little round of growth once those rates come back down. But as the rates go up, it pushes valuations for tech companies down, which then will leave you the opportunity to finally purchase Amazon, Apple, Microsoft, Alphabet. You'll be able to purchase shares of these companies at PE ratios that you haven't seen in over a decade because rates were so low. So it's going to be a great opportunity for people to buy these stocks when this dust settles and when all is said and done. And I'm happy about it.
You know what I just thought of? It's wild, man. Like what perfect timing. And I don't even think we did it like this on purpose. It's just going to work out that way. But we literally have the start of what is going to be a pretty exciting month coming up. And we have Trader Palooza on Saturday.
Yep. I am, Trader Palooza is something I'm really excited about. Trader Palooza is going to be this Saturday. It's It's a 12-hour long virtual training event where the moderators from True Trading Group and myself, we host 1 hour long workshops covering a variety of different topics. We start at 8 a.m. Eastern. We finish at 8 p.m. Eastern. And I'm really excited about it. You know, it's going to be, I guarantee you're going to learn more in one Trader Palooza than you probably learned in the entire last year trading on your own. So it's something that the mods and I are looking forward to. I know members, I know you guys are looking forward to it. It's going to be a lot of fun. That's going to be this Saturday.
Yeah, but what a time to have it. You know, you're literally, we're going to get a boot camp, like a crazy trading boot camp right before the start of next month.
Yep.
It's good timing.
It's perfect timing. It's absolutely, we're going over core trading, especially core trading with your long-term ads, your long-term holds. We're going over deep dive due diligence. We're going over how to trade like volatility, how to trade a volatile market. We're going over trader psychology stuff for this environment, like long-term portfolio. I mean, it's going to be such a great, I mean, the timing could not be any more perfect. How do I join Trader Palooza? You have to purchase a ticket.
So, and you have to be a member.
Yes, you have to be a member and you got to purchase a ticket. Well, Jason Walkenbach, you got to get your butt back in here, brother.
Yeah, you may want to run and balk your way back into True Trading Group. That's awesome. So, all right. Very, very cool. How much is this?
He's a payment plan lifetime member.
No, that's Michael Hayson.
Was that not the same person?
No, Jason Walker.
How do I buy a ticket?
Oh, I don't know. I wasn't.
Yeah, he said, how do I buy a ticket?
Send me a text. Or send a text to 786-505-4049.
Let's put that up on the screen. So anyone that's maybe watching that wants to buy a ticket, we'll put it up on the screen.
You have to be a member, though. Don't text to buy a ticket if you're not a member.
Yeah, guys. So you can text the phone number. You have to be a member. You can text the phone number at the bottom of the screen. If you guys want to buy a ticket to Trader Palooza, it's cheap, guys. It's cheap. It's not going to cost you a lot of money. But 786-505-4049. That phone number is at the bottom of your screen. So again, 786-505-4049. If you guys want to attend the Trader Palooza, it's going to be a hell of a lot of fun. So again, but you have to be a member, guys. You have to be a member. If you're not a member, you can't attend. You got to be a member. So if you're not a member and you want to become a member, you can send a text that number, and then we'll get you set up with a ticket if you become a member of True Trading Group.
So good news. I know we were waiting on this, but I do have I do have 10 laptops today.
Oh, wow. Because I thought we only had what we had left from yesterday. We only have like 2. So you got a couple more?
That is what I'm being told. Yeah, confirmed. See how many people are new, and then tell them how they can join.
Yeah, all right. And guys, yeah, and listen, the Apple conference call has begun. So I'm keeping an eye if there's any highlights or specific notes that come out. The stock has stabilized at 143, 142. While Tim Cook is going through his introduction and his opening remarks to the conference call. So the stock has stabilized a bit. I'll let you guys know if something drastic happens on the conference call with Apple while we're doing this. But what I'll do here actually for members or for people that are not interested, again, I know I asked you guys before, but one more time. Oh, that's Johnny Chase, man. That's incredible. Thank you for your son's service. Thank you for your family's sacrifice. Johnny Chase is a member and says, my son is in the Army and will be joining TTG this week. Thank you, your son. I can't wait to trade with him. I can't wait to do everything I can to help him as he helps every single one of us with the service that he has volunteered. So thank you very much for you and your family there. People that are not members of True Trading Group, guys, I just want to see, I know I asked you earlier, but I want to see again, just type the letters TTG for people that are not members, because what I'll do here real quick for people that are not members, if you're interested, like in Trader Palooza, you're interested in the platform that we have in the membership and True Trading Group, I'll tell you how you can join because we do have 10 laptops. Thank you, Adam, because we only had 2 before we started the live stream. So Adam was able to get his hands on a couple of more. We do have free laptops today for people that join True Trading Group. We cover the shipping costs. We ship anywhere in the world. So we'll get you guys that free laptop. But type the letters TTG if you're not a member. I want to see who we have that's on here. Diana Zamora. We got J Trades. Fight the good fight. Welcome back, man. I haven't seen you in a while. Welcome back. Silver Eagle, Nasir, Camden. Hey, you guys can type TTG for those. Vic Caspar, I saw you asked about the membership, Vic. I will. Camden asked about the membership as well. I'll tell you guys in just a moment. Jonathan Wilson. Great, guys. Let me go over with you. Okay, so everyone that's typing TTG right now, Rebister. Oh, Matt sent you. Nice, Sam Bam. Yeah, Matt's a good friend of ours. Elijah, what's up? Kenneth. Jermaine, awesome. I need a laptop. I don't have one for real. All right, well, Camden, you get a free laptop when you join True Trading Group tonight. The next 10 people that join will get a brand new laptop. It's going to either be an Asus, Acer, HP, Dell, or Lenovo laptop. It's totally free. We cover the shipping. We ship anywhere in the world. And for those of you that are not members, normally the membership to True Trading Group, normally it's $2,212, but that's if you were to go to our website directly by yourself on your own. You guys are on this live stream here with me. That means you're motivated, you're dedicated to learn how to make money in this market. So you guys will actually be able to use the coupon code TTG121. Okay. So you can go to ttgoffer.com and then you can use the coupon code TTG121. You'll click apply code. The price will flash green. It'll drop all the way down to just 11. It'll drop down to 1145. No. Adam, what is it? 11 what? Adam, you're not on. Your microphone, nothing is on. I can't hear or see what you're saying.
Are you talking to me?
Yeah, I'm talking to you.
What were you saying?
I'm saying with that coupon code drops the price to
TTG121.
Drops the price to
1145.
Okay, that's what I said, and then I thought it looked like you shook your head no when I said.
No, I was talking to Sammer.
Oh, okay. So right, because yeah, you shook your head as soon as I said that. I thought that I got the price wrong. So guys, so that'll drop the price down to 1145 when you use coupon code TTG121. That's a 48% discount off the 2212 price. Now there's no upsells for courses. There are no additional costs for tools. All of our courses and tools are included when you guys become members. There are $5,000 worth of trading and investing tools from some of the top fintech companies out there that are on our platform that you get to use when you become a member of TTG when you pay the 1145 price point. Okay. You do not have to enter your address to get that free laptop. As long as you see a laptop in the checkout cart, that's how you know that you're getting one of the 10. And when you sign up, you'll get a welcome email that has instructions on how to claim that free laptop, and we'll ship it anywhere in the world. We cover shipping. It's totally free. You can use it to trade with, use it for work, give it to your kid for school, sell it on eBay for a few $100. I don't care what you guys do with it. It's free. It's our gift to you for joining the family. We've got relationships with wholesalers, and we can get our hands on these laptops for cheap prices when we buy them in bulk. And I think it's a great value add for our new members. Make sure you're using a brand new fresh laptop that's not filled with viruses and is slow and crashes and all that kind of stuff. All right. If you have any questions about the membership, you can send a text to 786-505-4049. And you're also going to get our double your money back guarantee. Yes, all of you that are typing TTG, I'm dead serious. I offer a double your money back guarantee. So it's actually quite simple. Okay. Here's how it works. I stand behind this platform. Okay. I see the results that members have. And I believe so strongly that if you put forth a little effort, that our platform can help you reach your goals, that I'm willing to guarantee you a 100% return on your investment. If you join True Trading Group, you have 12 months. Go at your own pace, go at your own schedule. Go through our courses, pass our quizzes, attend one study group. That is all I ask. Do those 3 things. Okay? If you do those 3 things and you cannot make back that membership cost of $11.45 at least once during your membership, I will give you double what you paid. So I will literally hand you back $2,290 and you can keep the laptop. That's how confident I am in this platform. I'm willing to put my money where my mouth is. Now, I don't think you need the double your money back guarantee because we've only had to give a refund to 2.6% of our users since 2016. We also have a retention rate, meaning people that renew their membership, of 78%. We are 5-star rated on Trustpilot with almost nearly 1,800 reviews. So based on what members tell us, the reviews they leave, based on the refund rate and the retention rate, I can very confidently say that TTG has worked for thousands of people. And if you put forth a little effort, I think it can work for you as well. And I'm willing to back up that claim with a double your money back guarantee on top of that brand new free laptop. You just have to go to ttgoffer.com, enter the coupon code TTG121, click apply code. The price will drop by 48%, $11.45. That's it for the whole year. There's no upsells for courses. There's no upsells for tools. We're like the Netflix of trading communities. You get the access to everything that we have. You get our entire 18-course curriculum, which is a simplified version of what I learned trading at the hedge fund in New York. That's where I learned. You're also going to get Benzinga Pro's real-time newsfeed, Quote Media's full book level 2, TradingView's premium charting software, ETNA's simulator, the Trade Ideas scanner, our own proprietary scanner that lets you create custom scans, our chat room, our mobile app, which lets you see the screen share and listen to the audio because the mods and I talk to you during the day on the mic, all of our trade alerts from myself and the 9 other professional traders that are in TTG with you all day, every day, that have been able to maintain a cumulative win rate of around 80% for the last 2 years. All of our daily live workshops, 2 private study groups with one of our pro traders to speed up your learning curve. All of this is included when you pay the $11.45. You don't pay anything extra for any of the things that I had just mentioned to you. You just have to go to ttgoffer.com, enter the code TTG121, click apply code, get the 48% discount and the free laptop. Apple has now just gone green. Not green on the day, but green from the close. So we closed at 145. Apple is now 146 as we are getting the conference call is underway. Their gross margins of 43.3% was a September record. So that comment coming through right now, a September record for Apple, 43.3% gross margin. That is a massive gross margin for a company of that size with that revenue. That is insane. And you can see the SPY has stabilized, climbing back up now 377.50 as Apple is moving its way back to the upside. So I've told you I'll update you guys as that gets underway. So that's how you guys can take advantage. Like I said, you're going to get the free laptop as long as you see one in your checkout cart. You have any questions at all, send a text to 786-505-4049. Let me actually show you guys the platform. So for those of you that are interested, we have a lot of new faces that are with us here today and a lot of new members. So let me actually show you the platform for those of you that are new so you can see actually what you're going to get access to, because it's all inclusive, right? You get access to everything that we have there. So you're going to get the chat room. The chat room is where the mods and I share our screen. We're live on the mic. We're calling out trades in real time. We open up at 7:30 a.m. Eastern. We close after the close. Myself plus 9 other professional traders. We trade stocks, options, crypto, futures. We day trade, we swing trade. We trade small caps, mid caps, large caps, ETFs. We do it all in True Trading Group. And we're with you all day, every day. We're not gone after an hour or two and you'll have to fend for yourself. The mobile app will let you actually follow along with what we're doing in case you can't be in front of your computer. You'll get the real-time trade alerts. Whenever one of our moderators enters or exits a trade, you get a push notification on the mobile app. So if you're not in front of your computer, don't worry about it. We got you covered. You guys can still follow along with everything we're doing in chat. You get 2 private study group sessions, your chance to ask questions to one of our pro traders and speed up that learning curve. You get Benzinga Pro's real-time newsfeed. Benzinga Pro, this newsfeed, this will cost you over $1,000 if you go to Benzinga directly. It's included with your membership when you pay $11.45 to True Trading Group. TradingView's premium charting software, that's going to cost you about $600 a year. All right, that's about $600 a year, and that is also included free or included with your membership? How much would the renewal be the following year? JC, the renewal will be exactly what you pay when you join. So when you guys join, so if you pay $11.45 tonight, it doesn't matter next year if our membership's $2,500. You'll only pay $11.45 to renew. The price you pay when you join TTG is the price that you are grandfathering and locking yourself in for life. And that's a big deal because we have a 78% retention rate. So the chances are that you're going to want to renew your membership because 78% of our members do. And why wouldn't they? Because they're making money. That's the reality. Members of True Trading Group, not 100% of them, obviously you can have a 100% success rate, but the majority of members at True Trading Group, they're making money and they're becoming better traders. You don't believe me? Watch this real quick. Members, I'm talking to members specifically. If you're a member of TTG and you guys are making money this year and you're becoming better traders, I want you to type the $ in chat right now. Literally, members of TTG, type the $ in chat right now if you're making money because of the TTG platform. Anybody that's not a member, just pay attention to how many $ you're going to see come through this side of the screen because these are your peers. These are people just like you. They found True Trading Group on a live stream just like you have, and they are now telling you that they're making money and they're becoming better traders. They have all the same excuses and the same hurdles to overcome that you have. They have full-time jobs. They've got small accounts. They've lost money in the market before. They have no experience. They were scammed by some other group. But yet now here they are telling you that they're making money and becoming better traders. If they can do it, so can you. I love them to death, but there's nothing special about them. That all they have done is say, I'm going to get access to, they don't like whatever they just said on the Apple conference call. Apple just dropped about $6, $5. So they just didn't like what they just said on the conference call. But these members, guys, they've got all the same excuses that you have. But yet now they're making money and they're becoming better traders. And if they can do it, so can you. All they've done is get a professional level of education. I'm not going to teach you gimmicks. I'm not going to teach you some stupid secret. I'm going to teach you the same level of education that I learned when I worked at a hedge fund in New York. You're going to get access to $5,000 worth of tools that professional traders use to make better decisions. Now, $5,000 may not be a lot of money to pay for tools for the trader that works at Goldman Sachs. But it's a lot of money for you. It's a lot of money for you to start. Apple's not issuing any guidance. That's why the stock is moving to the downside, guys. So Apple is not giving any guidance. And Apple executive is saying that digital advertising and gaming are areas where the company sees some softness. So that's why Apple just dropped there after, we're talking like that's the comment that just came through on the conference call. And that's what just caused Apple to have a quick little dip there back to 141. Okay. So that's that. Let me go back and finish showing you guys the platform. As you can see on the screen, that is the Trading View charting software that's included with your membership. And that is included when you guys join. You're also going to get the Trade Ideas scanner. The Trade Ideas scanner is the industry standard to make sure you're always focused on the hottest stocks during the day. All right. This will cost you a few $100 if you go to Trade Ideas directly. It streams on our platform every day. You guys don't have to pay for it. It's included in the $11.45 price point. You'll also get the ETNA simulator that lets you trade stocks and options with fake money so you can practice implementing what you're learning in the courses. That's all going to be included. If you went to ETNA directly, it's going to cost you just under $1,000 a year to have access to that simulator. It's included in your $11.45 price point when you join the platform. You also get our own proprietary scanner that lets you create custom scans. You get dark pool data, options flow, unusual options activity. This information would cost you a lot of money, folks, if you paid for it directly. It's included in the platform when you join for just the $11.45. You also get a trading journal that will track your trades and break it down to the statistics and numbers. So you can see where you're struggling and what you're doing wrong. You get a social sentiment scanner that will actually go through Reddit, StockTwits, and Twitter and tell you which ticker symbols are being mentioned most so you can help stay ahead of the crowd. You get analyst ratings on any stock you're interested in. You'll see how many analysts have a buy, sell, or hold rating on any particular stock, what the insider buying, if there's insider selling, what the short data is. It's all included when you guys join TTG's platform. Every day we publish a watch list, the stocks we're looking at with the game plan and how we plan on trading them. And then you get all of our courses. Again, this is a simplified version of the 3-month educational training program that I received when I worked at a fund in New York. It's also the other 9 professional moderators in True Trading Group have added to this and expanded on this education as well. And there's no upsells. There's no like VIP courses that cost more money. Every course is included when you guys pay the $11.45 to join the platform. And it's beginner courses, it's advanced courses. There's courses on options, swing trading, trader psychology, crypto futures, you name it, we've got it. It's all in text and video, whatever's easier for you guys to learn. And then there's a video library that has about 300 hours of educational videos. These are the live workshops that we do with members covering a bunch of different topics. And you guys can actually attend all these workshops live when you become full-time members. And those of you that become members, you'll actually have a chance to attend Trader Palooza if you guys want to purchase a ticket. And that Trader Palooza workshop will be this Saturday from 8 a.m. till 8 p.m. Eastern. All right. So that's it, folks. It's time you guys invested in something real, guys. You gotta, listen, I can't make the decision for you, but you got to go to ttgoffer.com. You use the coupon code TTG121. You see a laptop in your checkout cart, you're going to get a free one. We'll ship anywhere in the world. We cover the shipping. And you guys have any questions, you can send a text to 786-505-4049. You don't have to enter your address to get that laptop. You'll get a welcome email with instructions how to claim that free laptop when you guys do join. And then you get the double your money back guarantee, which I don't think you're going to need. But if you can't make back the $11.45, I'll give you back $22.90. That's the deal when you join TTG. All right. So there you guys have it. Does anybody have any questions? Now would be the time if you have any questions. Now would be the time if you have any questions at all. Oh, that hurt. If you guys have any questions, now is the time. At what point during the Teach the Education course would it be good for users start paper trading to test and practice what they are learning, beginning, middle, or after they complete the initial training? I think you can probably start in the middle, and just start on the simulator and start practicing what you're learning and just start implementing that. You can either, just wait until you're finished, or I would say maybe when you're about halfway through. I certainly wouldn't do it in the beginning just because you really don't have any idea what you're doing if you're brand new. So I would at least get through half before you start trying to implement some of the stuff you're learning. If not halfway through, then you can just wait till the end and start paper trading and kind of see if you can implement what you're learning. Would you hold Meta long term? Yeah, at this point, if you're still long Meta, I don't think you should sell it now. The way that I look at Meta, this is how I look at Meta. Meta has turned into a very long-term story. It has turned into a EV company play. It's turned into, like a lithium battery play. It's turned into an artificial intelligence play in the sense of it's in the future. Yes, Adam, I'm well aware Meta is not electric vehicles. What I'm talking about is Meta has become a play that is in the future. Like it's not ready yet. Like electric vehicles, a lot of the electric vehicle companies, everybody was so excited about them last year. You're not ready yet for electric vehicles. Everybody got very excited about 3D printing. It wasn't ready. Those stocks all got crushed. Everybody got very excited for charging stations. Wasn't ready. Those stocks got crushed. Everybody was excited for artificial intelligence, and those stocks all got crushed. So like all of these sexy industries that people got very excited about and the valuations got completely out of control, they've all now come back down to earth, and they're not going to recover anytime soon. You're not going to see LI, XPeng, NIO, QS, ChargePoint, Blink Energy. You're not going to see any of those companies rally back to their all-time highs anytime soon. Not next year, not in 2 years, not in 3 years. It's going to be a very long time until those companies are going to see their all-time highs, if they ever get back to those all-time highs for some of them. If you're going to be investing in Meta, it's not because you think Meta is going to go back to 300 in a year or two. You're going to invest in Meta because you believe in the future of the metaverse. And the metaverse, just like all of these other exciting, sexy technologies, is not something that's ready now. But it's something that 5, 7, 10 years from now could be the greatest thing that was ever been invented since the internet. It has that type of potential. And if it is, and Meta is able to be successful and become the industry leader in that space, then Meta 5, 7, 10 years from now will be extremely exponentially more valuable than it is today. If you're going to invest in Meta now, it's not because you think the stock is going to just rip higher in the next 6 to 12 months. If that's the reason why you're buying Meta, don't buy it. That's my opinion. But if you believe the metaverse is going to be the next greatest investment in and the next greatest innovation in technology since the creation of the internet, then all of a sudden a long-term investment in Meta starts to look appealing. That's the way that you have to look at Meta now. You're not investing in Meta because of Facebook, because of Instagram, because of WhatsApp. You're investing in it because of the metaverse. And that is years away. That's how you have to look at it. Any other questions? Mike, is now a good time to buy Amazon for long-term portfolio? I like Amazon in like the mid to low 80s. You know, if we can get Amazon in the mid to low 80s, I think that's a buy. If you don't own Amazon at all, sure, I would say grab some. I think this is the stock's down 20%, fresh new lows. How much worse of an earnings surprise may you get going forward? I don't know. We'll see. But I would say the mid 80s, I think, is a great spot. I think it's a great spot for Amazon. But you don't necessarily have to wait for that price point. You can buy a little bit now. If it drops into the mid 80s, you can buy more. I'd say would be my opinion on it. But I love Amazon. I think Amazon's one of the best companies on earth. And they're only going to get bigger. Yeah, Mike. So we spoke a few times about inflation kind of playing a part here in earnings at some point. I'm actually surprised things were not worse in the overall market's opinion going forward. Yeah, Rhino, for sure. Things are not as worse in the overall markets because you've had a very sharp decline in yields, and that has stabilized the market. And you've also had a mixed bag. There's a lot of other areas of the market where earnings were actually good. Your tech companies' earnings were horrific, but a lot of your other companies, McDonald's, I don't know why I said Microsoft. McDonald's, Honeywell, Caterpillar, actually had Coca-Cola. A lot of these companies actually had great earnings. And these stocks have all traded to the upside. And the market right now, it's, the NASDAQ got crushed today, but the Dow was green, significantly green. The Dow was up 200 points today, while the NASDAQ got crushed. So other areas of the market are actually performing much better. Healthcare has been very, very strong. Merck's at all-time highs. You've had a very strong performance in AbbVie, United Health. So healthcare has been dominating. Energy's been dominating. Consumer staples have been doing well. Walmart, Costco, General Mills, all doing well. Pepsi, Coca-Cola, all doing well. So, there's other areas of the market that are doing well. And you factor in, you add to the fact that bond yields have come down and the dollar has come down, and that takes pressure off of equities. And the markets are actually holding up much better than people would have thought. If you had told me that Microsoft, Meta, Amazon, and Alphabet are all going to be down between 10 and 20% after earnings, and the SPY is still going to be at 377, I would have said, you're out of your mind. There's no way that that's even possible. Yet, here we are at 377, and Microsoft, Amazon, Alphabet, and Meta are down between 10 and 20% after earnings. And I think that's the reason why. So I think the markets are doing a great job holding together during an extremely challenging earnings period where this is the worst earnings I've ever seen in my life from these tech companies. Next question. I'll take just a couple more questions, guys, before we wrap things up. It is going to be about what happens with the dollar from here. Does it go lower to 105? I have no idea, Joseph, honestly. I'm not a Forex trader. I don't know what the dollar is going to do. I don't try to predict what the dollar is going to do. I just react to its movements. The dollar moving higher would be bad for stocks. The dollar moving lower would be good for stocks. I honestly don't really know what the dollar is going to do. If the dollar was to pull back to 105, that would be fantastic. That would be fantastic if it pulled back to 105. That would definitely help stocks move higher. What's your plan for Apple tomorrow? I don't think I'm gonna. I don't know. I don't know if I'm gonna trade Apple tomorrow. I don't. Look how choppy this stock is after hours right now. It's like when you take a look at Apple, why would I want to trade that when I can trade this? Oh, well, now these tails are all screwed up. Amazon's chart. But why not trade something else that has like a lot more direction? I think Apple has survived its earnings. It wasn't as bad as all the other tech companies, and it's in no man's land. This stock is in no man's land at 143. I don't see major support or major resistance anywhere. I don't see a major level here for where the stock currently sits. You have support levels a little bit deeper underneath you. I'm not really confident in either a long or a short on Apple. I don't know unless something changes overnight, I don't think I'm going to be trading Apple. I might just use Apple as a gauge or as a barometer tomorrow to trade other tech stocks possibly. So it's like if Apple starts to move higher and Apple goes green or something, I can use that as a barometer to maybe trade some other tech names. But I think right now Apple's too choppy after these earnings came out. I mean, look, the stock is up and down, up and down, up and down. It hasn't moved. It's barely higher than where it was before it reported earnings. But in the middle of that, you had a massive drop and a massive spike, a massive drop and a massive spike. So that stock is just back and forth pinballing. I don't want to put myself in that action. The best question you should be asking, Mike, is how can I join by Saturday morning so I can be at Trader Palooza 8? Yes, that is what you should be asking me. That is what you should be asking me. For those that want to join the family, you can go to ttgoffer.com, enter the code TTG121, click apply code. The price will drop to $11.45. You see a laptop in your checkout cart. That's how you guys know that you're going to be getting a free one. The next 10 people to join will get a free laptop. Do I think the rally's over? No, I do not. I actually think we go higher into I think December, the markets go higher. I don't actually think that the rally is over, but the next catalyst that'll make that decision for us will be the Fed meeting on November 2nd, where I believe the Fed gives you 75 basis points, but they insinuate that a less hawkish tone, and they insinuate that they might be soon done raising rates, and that would, I think, help the markets move to the upside. So we'll see if that happens on the Fed meeting on November 2nd. We shall all see. All right, guys, if you have any questions about the membership, like I said, 786-505-4049, 786-505-4049. If you guys have any questions at all about the membership, also, you can send a text to that number. If you are a member and you want to buy a ticket to Trader Palooza, you guys can send a message to that phone number as well. All right, folks. All right, guys, that's all. Hold on one second. All right, guys, we're going to go live tomorrow at 3 p.m. Eastern to trade the final hour of the day with you. All right. We'll be there with you guys tomorrow at 3 p.m. Eastern, so you can set your reminders. Like I said, guys, if you want to join the platform, ttgoffer.com, TTG121 coupon code, press apply code. The price will drop to $11.45. You see a laptop, you're getting one. You don't have to enter your address. You'll get a welcome email with instructions how to claim that free laptop. And you get your double your money back guarantee as well. Don't forget that. So you guys will join. If you cannot make the $11.45 membership fee, you can't make that back at least once during your membership. After going through our courses, passing our quizzes, and attending a study group, you guys will get double your money back. I'll give you back $22.90. That's how confident I am in this platform. Thanks for joining me tonight, guys. Subscribe to the channel if you haven't done so already. Smash that like button. I'll see you guys all tomorrow. Have a great night.